A Series LLC consists of a master LLC with one or more series of members, managers, interests, or assets. Although contained within the master LLC, each series can have separate rights, powers, and duties with respect to specific property and liabilities, and can have separate business purposes and investment objectives. The series may also have common members with identical ownership interests, common members with varying interests, or different members with unrelated interests. One series could even own an interest in another series. This makes it possible for each series to function as the equivalent to a freestanding legal entity. In theory, it's like a parent company with multiple subsidiaries without all of the cost and burden of multiple entities. Right now, they're only recognized in a handful of states: Delaware, Illinois, Texas, Oklahoma, Tennessee, Iowa, Utah, and Nevada. The core benefit of a Series LLC is that it insulates liabilities associated with assets of one particular series from assets held in another. This ability to place multiple assets in a single LLC while being able to insulate the liabilities associated with each of those assets can provide for superior asset protection while eliminating the administrative burden and expense of forming multiple LLCs, which can significantly reduce your legal, accounting, and other administrative expenses. For example, if you own several parcels of real estate, you can put one parcel in each series. A film production company could place a separate film in each series. However, to maintain the liability protection of each series, it's important to treat each series as a separate company. This includes having a separate bank account, maintaining separate books and records, signing contracts using the name of the series, holding real estate titled in the name of each series, documenting all transactions, and keeping adequate amounts of capital on hand for business purposes. If you expect to preserve the integrity of the Series LLC, then you must understand there are more housekeeping requirements that need to be adhered to, because bottom line, using a Series LLC incorrectly can expose you, the business owner, unwittingly to veil-piercing lawsuits by your creditors. While the potential benefits of the Series LLC are tremendous, to date they do not appear to be widely used. One reason is the uncertainty surrounding how they will be treated for federal and state tax purposes. Even though the statutory provisions authorizing Series LLCs allow for the treatment of each series as a separate entity for state law purposes, this does not necessarily mean that this separate existence will be respected for federal or state tax purposes. Every state is different, and of course, every state has the authority to change the rules. There are many practical uses for using a Series LLC when it makes sense rather than forming multiple entities, yet because this is a more complicated LLC, which is not recognized in the majority of states, doesn't have a lot of case law related to a variety of issues, the decision to use one should be carefully addressed by someone who understands them and can explain them clearly, so you have the ability to make an informed decision as to whether it makes sense for you.